activities of SIA is airline operation. Most of SIA's revenue come from airline operations. The financial year 16-17 total revenue of SIA is 16,617.4 million. Airline operation consists of three different airlines: Singapore Airlines, Scoot Airline, and the Budget Aviation Scope. The total revenue of airline operations is 30,473.2 million. Airline operations revenue contribute to 81.07% of the total revenue earned by SIA.
For financial performance in the year 15-16, SIA has seen a slightly lower revenue compared to the year 14-15. With revenue of 15,228.5 million in the year 15-16 and revenue of 15,565.5 million in 14-15. However, expenditure in 15-16 has seen a significant decrease compared to 14-15. Total expenditure in 15-16 is 547.3 million, whereas 14-15 expenditure is 15,156.1 million. This is due to a decrease in jet fuel prices. This leads to a high operating profit for the year 15-16. Operating profit for 15-16 is 681.2 million, a 66.4% increase compared to 14-15's operating profit of 409.4 million. Earnings per share for 15-16 has seen a dramatic increase of 119.7% compared to 14-15, from 31.4 cents to 69 cents. Ordinary dividends per share for 15-16 also has a gain of 104.5% compared to 14-15, from 22 cents to 45 cents. Return on equity holders' funds in 15-16 was 6.4%, a 3.5% compared to 14-15's percentage of 2.9%. Return on total assets too has seen an increase from 1.7% in 14-15 to 3.6% in 15-16, a total increase of 1.9 points. In conclusion, year 15-16 has a better financial performance compared to year 14-15.
For social performance, Singapore Airlines Goggles ended its adopted charities and Singapore Children's Social Days through operation, funding, and the employer volunteers activities. So Singapore Airlines Goggles also assists Singapore Zoo and the Jurong Bird Park by transporting the live animals all around the world. Another activities will be transporting unique and the priceless art pieces, which require extremely dedicated handling. In addition, Singapore Airlines subsidiaries airline, Scoot Air, embarked on newest project with Child Dreams Foundations. So Scoot Air participated field trip alongside the Child Dreams staff as they visit project in principal areas of Cambodia, Thailand, and allows to learn more about the organization works. So one of the activities included visiting a school construct by the Child Dreams in Snow Videos, Cambodian, to interact with the local children and assist in the repainting at the school.
The group profit for the financial year improved 445.1 million from 406.7 million on FY1516 to 851.8 million. Total comprehensive income of 1,084.7 million on FY1516 compared to 257.1 million on FY1415, which means SIA might have a poor investment strategy or trouble managing currency hedges during FY1415.
Based on my observation, the difference is mainly contributed by the following items. Here I'll highlight about the net fair value changes on cash flow hedges. Cash flow hedges is designed to minimize the risk that a company has to pay more than it expects. SIA has a much better cash flow management during FY1516. It has a 124.3 million of gain on cash flow hedges compared to a loss of 738.8 million on cash flow in 14-15. During these two financial years, the company have both positive net fair value changes on available for sale financial assets. But on the year 15-16, it is on 140.7 million, which is almost double of the value of 14-15. Loss of 21.9 million on currency translation differences in 15-16, a decrease compared to a loss of 17.7 million in 2015. Loss of 1.9 million on dilution of interest in an associated company due to share options exercise during 15-16 compared to a gain of 1.6 million during 14-15.
Okay, we understand AASB choose entities should not present any items of income and expense as extraordinary items in the statements presenting profit and loss or other comprehensive incomes or in the notes. However, it also shows that when items of income and expense are material, entities should disclose their nature and the amount separately. So here I will also mention about the assumptional items. First, as Tiger Airways become a subsidiary, remeasurement gains from combinations of Tiger Airways of 119.8 million, but impairment of China Cargo Airlines of 63.6 million due to the negative shareholder equity and the continuous operating loss in custom. Gain of 70.3 million on the sales of leasing from certain post-closing adjustments. Competition-related fines, settlements of 2.1 million. In September 2014, the South Korea Fair Trade Commissions refund 1 million to Singapore Airlines cargoes. In total, the assumptional items only lead to a profit of 34.5 million during the 1415 financial years. Overall, Singapore Airlines may have a poor investment strategy or trouble managing currency changes during the 1415. However, during 1516, Singapore Airlines improved a lot the investment strategy. Thank you.
Singapore Airlines have 74 aircraft held under operating leases. SIA normally rent the essential airport facility like check-in kiosks, boarding gate from the respective airline owners, as well as renting the property for their overseas office. Under AASB 117, those facilities are off balance sheet and not reported as liabilities on the balance sheet. Under the new lease accounting standard AASB 16, SIA are required to recognize the right to use asset as well as lease liabilities at present value of lease payment for those aircraft. Subsequently, depreciate right to use asset and make sure liabilities based on the interest method. Disclosure. Balance sheet. Right to use asset are either present separately from other asset on the balance sheet. Similarly, lease liabilities are present separately or other liabilities on the balance sheet. Income statement, depreciation expense, and interest expense cannot be combined as single lease expense in the income statement. Cash flow statement. Principle of payment on the lease liabilities as present within financial activities. Investment payment are present based on the accounting policy elections in accordance with IAS 7 statement of cash flow.
Does AASB 16 benefit users of financial reports? My answer is it depends on what industry the company is. So, according to the PwC Global List Capitalization Studies, airline industry may significantly affected by the AASB 16, as 47% of median increase in debts, 33% of the increase in earning before interest, tax, depreciation, and amortizations. Therefore, Singapore Airlines will appear to be more asset-rich, but also more indexed as a result of increased liability record on balance sheets. So, EBITDAs will also increase as rental expense replaced by interest, depreciation, and amortizations. Okay, so as increase of the liabilities, some financial ratios will deteriorate. For example, current ratios will see a drop in its numbers. So I expect Singapore Airlines will have the cost of borrowing for new debts to increase, as well as the gearing ratios will also see a drop due to more debts indicate to a poor use of leverage. Identifications of the list could result as sharp costs, especially Singapore Airlines often list big ticket items, including aircrafts. So, however, as a user of financial reports, stakeholders of Singapore Airlines could notice that ASB 16 will result in more relevant, faithful, and comparable financial statements.
In conclusion, although the effective date of the new standard is 1st January 2019, the extent of data gathering and requirement to add new processes for many entities means that applications to adopt ASB 1116 should begin as soon as possible.